Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 25th of September. The first Elliott Wave count now expects that the upward trend is going to resume and the next target is at 2160. However, classic analysis sees a recent breakdown from a triangle pattern and calculates that the target hasn't been met yet. The target for that is 1712. I have an alternate Elliott Wave count that expects a downward trend could be underway, and for that the short-term target is at 1837. Elliott Wave analysis first, classic analysis last. Both my Elliott Wave counts at this stage are bullish, and I have an alternate which considers the possibility that a major high was in place back here. We should always assume that the trend remains the same. Pretty obviously gold is in an upward trend. Conditions up here were very extreme overbought and there was divergence, so I am considering the possibility that the upward trend could have ended. While price remains above this invalidation point, I will assume that the trend remains the same, upward. When this wave count is invalidated, then the alternate will be very seriously considered. This wave count sees the upward trend as a supercycle degree B wave subdividing as a double zigzag. The bigger picture at the monthly chart level is still bearish. When supercycle B is over, then supercycle C would be expected to make new lows reasonably below the end of A, but we're not there yet. The second zigzag in this double begins here and may be incomplete, labelled A, B, C. C needs to subdivide as a 5-wave structure, and so far within C we may have 1, 2, 3 and 4 could now be over, and 5 may have just begun. If 4 continues any further, it may not move into wave 1 price territory. Let's take a look at this at the daily chart level. We're going to look at all of primary C where it begins back down here, this point here, 1, 2, 3, 4, 5 for this wave count is expected to continue. I've calculated a new target for 5. Now I know where 4 may have ended. 5 will reach equality in length with 1 at 2160. And 4, if it continues any lower, may not move into wave 1 price territory. This will remain the first main wave count unless it's invalidated with a new low below this point, because we should always assume that the trend remains the same until proven otherwise. We should assume that there is an upward trend still in place and that this is a counter trend movement until that view is invalid. The structure of intermediate 4 here is seen as a zigzag, A, B, C. Minor B is seen as a regular barrier triangle where D and B end about the same level and the BD trend line looks essentially flat. However, intermediate wave 4 has strongly breached this channel. This, in conjunction with some technical indication that this could have possibly been a more sustainable high, means that we have to consider the alternate that sees a high in place back here. At the hourly chart level, here's the end of intermediate wave 4. Minor wave C fits very nicely within a channel drawn from 1 to 3 with a copy on 2. A small overshoot here. Apart from that, it was adhered to, and now it's been properly breached by some upward movement. This channel breach may be an indication that this downward wave is over and the next wave up has begun. And for this wave count, the next wave up is expected to be an intermediate degree 5th wave. The target remains the same as at the daily chart level. Within intermediate 5, minor wave 2 to come, or minute wave 2 if it continues, may not move beyond the start, below 1849.22. At the daily chart level, this is the same as the first wave count, apart from how I'm seeing the corrections within here. It is possible that there was a supercycle degree trend change back at the last high for gold, and there's a new downward trend to last possibly years, if at least several months, possibly more than a year or so, and to take price well below the December 2015 low, which I think is about 1046, to new major lows for gold. This wave count is possible, but I want to see a new low below this confidence point before I start to take it really seriously, because again we should assume the trend remains the same until proven otherwise, because if you approach markets with that mindset, then you'll be right way more often than you're wrong, and you won't be trying to pick highs and lows, which is bound to lead to major losses. If this wave count is correct, then the new downward trend has begun with 1, 2, 3 overlapping first and second waves. We may have just moved through the middle of a third wave and may be nearing the end of this third wave at minor degree and then this third wave at intermediate degree. For gold, it's fifth waves to end third wave impulses 1 degree higher, so minute 5 to end minor 3 and minor 5 to end intermediate 3, quite often end with quite a lot of strength. The fifth waves for gold can be stronger than the middle of the third wave. This wave count expects we could see some explosive downward movement to end minor 3 and or intermediate 3, so an increase in downward momentum would be expected. If within minor 3, minute 3 is over here, then minute 4 may not move into wave 1 price territory above the very short-term invalidation point. A target for minor 3 is for it to reach 1.618, the length of minor 1. If this target is wrong, it may not be low enough. Fifth waves are also often extended. When primary 1 is over, then primary 2 may not move beyond the start of primary 1 above the all-time high for gold. At the hourly chart level, here's the end of minute 3, the start of minute 4. It may be an incomplete zigzag, A, B, C. Draw a little channel around it from the start of A to the end of B with a parallel copy on A. Look for resistance about the upper edge. Minute 4 may not move into wave 1 price territory. When minute 4 is complete, look out for an increase in downward momentum toward that target for minor 3 at the daily chart level. When I know for this wave count, if this is how price behaves, when I know where minute 4 may have ended and minute 5 may have begun, then I'll be able to calculate that target for minor 3 to end at a second wave degree. At that point, that target on the daily chart may change, or it may widen to a small zone, or I may possibly have 2 targets for minor 3 to end. At the weekly chart level, this is a bullish wave count for gold. This is my second wave count. It looks at the possibility that the bear market for gold was complete in December 2015 at 1046, and a huge bull market began back there. The bull market begins with a first wave at cycle degree, a second wave at cycle degree, unfolding as a double flat correction, and a third wave may have begun here. A third wave at cycle degree is labelled at primary degree 1, 2, 3, 4, and an extended fifth wave. This is really typical and common for fifth waves of third wave impulses. Primary 5 unfolding as an impulse at intermediate degree 1, 2, 3 incomplete, and then 4 and 5. Intermediate 3 unfolding as an impulse 1, 2, 3, 4, and now 5 is expected to have begun. If 4 continues any further, it may not move into wave 1 price territory. Let's take a look at this at the daily chart level with the end of intermediate 2. There's this point down here. Now we're looking at this impulse of intermediate 3 in more detail with minor 1, minor 2, minor 3, minor 4, and now minor 5 may have begun. The target at the daily chart level for both my wave counts for the next upward wave to end is the same. The invalidation point is the same. If they're invalidated with a new low below this point, I'll expect a sustainable high was in place back here. But for now, let's assume the trend remains the same until proven otherwise. But take that alternate seriously, it certainly is possible, so manage risk carefully. At the hourly chart level, here's my minute C of minor 4 subdividing as an impulse 1, 2, 3, 4, 5. Minor 5 may have begun here, and within it, no second wave correction may move beyond its start. This week we saw a downward breakout from a little triangle pattern which can be seen at both daily and weekly chart levels. Look out for next support about 1,800. If price breaks below that support, next support about 1525. The downward breakout has support from volume at both time frames. At the weekly chart level, on balance volume has a new week range. A breakout of this little range would give a signal either way. ADX reached very extreme for the prior upward trend, is now declining. That trend may be over. ATR declines as price moves sideways. RSI is in neutral territory. There's plenty of room for price to rise or fall. There was a strong double bearish divergence at these highs, and at the weekly chart level there were two strong bearish candlestick patterns. So there's some technical indication it's possible this could be a more sustainable high. That supports that alternate Elliott wave count. At the daily chart level, here's the triangle in a bit more detail. To calculate a target from a triangle, we take the width of the base of the triangle, this high to this low. We add that difference to the point at which price broke out from the triangle. That gives us a target at 1712. Along the way, look for support about 1800. That may initiate a bounce. The downward breakout from the triangle had good strong support from volume, so that supports the target being reached. That adds to the probability that the target is going to be reached. On balance, volume is constrained at both daily and weekly chart levels. Let's look for a breakout which may provide a signal either way. RSI is still in neutral territory at the daily chart level. ADX at the daily chart level now indicates that there is a downward trend. It's in an early stage. So the triangle, the breakout, ADX telling us there's a trend, and RSI not yet oversold. Let's expect downward movement to continue to find support, and we'll look then to see if RSI reaches oversold. I'll use RSI, not stochastics in a trending market. I use RSI. Once RSI reaches oversold, it can reach reasonably oversold. I will then look for bullish divergence between swing lows of price and RSI before I expect that the downward trend could possibly be over. That's all for me with your gold analysis. I hope that all of our members are having a fantastic weekend.